Hello, everybody, and good evening to you. Today is the 15th of July, 2023. It's Saturday, and it's a week since we placed our order for our third trade in this series, where we are checking out whether forex trading, futures trading, spread bet trading does work or not. Before we get into the details, it's important that we remind ourselves of some things. Again, here's a disclaimer. If you could just spend a few moments reading through that. That's the first part of disclaimer. At the bottom there, it says all persons will choose to acquire or use any of Dr. Simplicity Trading book, manual, or videos do so at their own risk. They are encouraged to discuss with an appropriately licensed financial market advisor regarding the suitability of trading or of any particular trading strategy. And again, there's a must read. Again, at the bottom of it, it says Dr. Simplicity Trading does not claim to be a financial expert, not claim to be an expert in futures or forex trading. This presentation is published as a personal exercise and should not be relied upon for the purposes of trading the markets. So our strategy is that for each trade, there can only be 3 outcomes, all outlined as you see. Either the orders are triggered and the trade is stopped at for a loss. Secondly, orders are triggered and trade closes for a profit, or orders are triggered are not triggered by the good till date period and deleted. And it's all rule-based trading. Every trader has a set of rules they follow right from the beginning. For now, we will reveal only 3 rules, which I shall be following. I'll be trading only one instrument, the British pound, GBP, USD, and I'll never risk more than 5% of the starting capital each month. And if at any time the starting capital is diminished by a maximum of 30% drawdown, I will abandon the strategy and consider it unviable. So if you like what you're seeing, what you're watching, click the like button, subscribe to the channel so that you can always pick up our next video. So going back to the trade that we set up on the 7th, it was on the 7th precisely that we set this trade up. If I could enlarge this for a moment, and it might be better for us to see. Yeah, so here's the trade set up. The summary is there on the left-hand corner. And on that day after the non-farm news on the 7th of July, we set up the trade. We thought we had a buy situation here. So we set up a trade to go long on the white line here. And our good till date was the 22nd of July. And the market had closed up here on that day, on the Friday. And we had put up this trade on the next day when the market had closed, when we had time to look at what had happened. We expect the market to track down from that close, track down into our buy zone, and from there track up to profit. And if it didn't do so, we will just simply continue downwards to hit the red line being our stop line for a loss. To the left here, like I said, is the parameters of a trade. The starting capital was 9,025 sterling. The trade zone itself had 15 points to it. We added a bit of wiggle space, so our total stop loss in terms of points is minus 20, and we were looking for a profit target of 30. Risk per point was £22.55. Total risk, if the trade loses, it's not more than 5% of the starting capital. In this case, it worked out to be £451. On the other hand, if it goes into profit, we stand to go for 30 points. which is equivalent, if you multiply 30 points by the risk per point of 22.55, you will get this 676.5 pounds in profit. And our risk to reward ratio is 1 to 1.5. That was the original setup which we had. And so we will see what happens thereafter. We were going to leave the trade, like I said, until the 22nd of July. So let's see what happens now. I'll just downsize this one for a moment and get it out of the screen, because right behind this we have the outcome. Great. And here's the outcome. If I could just clear up all the previous markings, so you can see the outcome. Great. So here's the outcome. It happened that by the very next trading day, which was a Monday, the 10th of July, whereas the market had closed here on the Friday, we can see that it did track down eventually into our buy zone. And we picked up that trade on the 10th of July. And look at that beautiful instant reaction to the upside. And bingo, within 3 candles, 1, 2, and 3, we were hitting the target. The target was hit within 3 candles. Again, if I can enlarge this, maybe you can see better. If I can get to that for a moment. Now, that's it. So we can see it better. It was just wonderful. It was a beautiful trade triggered on that point on the 10th of July, and straight away moved into profit, the profit being the yellow line there. And so that was it. It could be as quick as that sometimes. On this occasion, we've been lucky. Trade outcome, as it says here, is good. They're always good anyway, because we know what the outcome will be. It's either we take profit or lose some money, or we delete the order. And in this case, we made a profit of 676 and 50. Let's drag this to one side. Maybe I can see the. So this is the trade outcome after the orders that triggered. Just going to clear it out a bit so you can see better. So this is the trade outcome. The profit was 676 for this particular trade. So that's it. It's been beautiful, that particular trade, because our previous 2 trades were losses. And now we're going to update our record sheet, to reflect this profit and see where we are. So we made a profit of 676. If I go quickly to our record sheet, and here's our record sheet. Let me just turn this down a little bit so we know what we're looking at better. This record sheet again is down here. So that's our record sheet. Previous trades were losses. The first one was in May. We made a loss of 499. 84, and in June made a loss of 475, and the total loss, if I take this out for a moment, that's 676. That's a profit for the month of July, 676.50. If I take that out for a moment, our total loss prior to that trade, that third trade, was a minus 974 and 80. But on the 10th of July, we made some profit, 676.5, I believe, 676.5. So if we highlight that for a moment, I think it's highlighted already. Let's add some color to it. Let's add some color to it, and there we go. So we made a profit of 676, and straight away we were cut our loss down to minus 298.36. sterling. This is on our third trade since the series started. We have, I believe, 9 more trades because we want to go all the way to 12 trades to see what happens within a year of trading, whether this whole exercise is profitable or not, and whether it's comparable to traditional investment portfolios, traditional investment portfolios or strategies. And that's one of the aims of our trading. So currently, our balance going into the next trade will be 9701.7. The next trade, we expect it to be in sometime in July, usually the first or second Friday of of August, not July. We've done July. Will be in the first or second Friday of August when the non-farm news is released. Our trade is based, or rather, our strategy is based around trading around the non-farm news released by the US every month, once a month. And until then, I am signing off. It's been good as usual. Whether we'll make a loss or make some profit or delete, it's been good because it can only be one of those 3 outcomes, like we said earlier. Thank you for watching. Be good. And until then, in August, be good, be well. Bye for now.